Welcome, ladies and gentlemen, to a video that is well overdue because we're going to be talking about one of my most controversial investments, and especially with Halloween around the corner, this is very well suited, if you know what I'm saying. But we're obviously talking about GEO Group, my prison real estate investment trust that I'm currently down 43% on, watching my hard-earned dollars go from $7,300 invested to $4,100. And luckily, I recouped a little bit of those losses because I got on a Netflix documentary called Immigration Nation talking about this stock. And luckily they pay pretty well, but currently there are a lot more bulls than bears on this stock according to my Scotia iTrade account. But if you listen to CNBC, they're going to say otherwise. And if we just take a look at the overview, guys, we are currently down year to date on this stock, where it's down 32%, but it's paying out a 12% yield that it just did a cut on. And there's so many questions and concerns about this, and I'm going to get involved in all of this. And the reason I'm talking about it today is because of this brilliant Seeking Alpha article that was written by Hoya Capital Real Estate. It's very intensive. It goes through everything that I talk about, and I figure this would be a great time to update it. So if this is something that interests you, consider slapping that like button. But let's jump right into this. Welcome back. Passive income investors alike to one of the most stomach-turning sectors in the market. And again, I just want to applaud whoever, the Capital Real Estate here, Hoya, that wrote this, because it was just brilliant. I mean, it touches on everything. So we're going to get right into this. We're not going to read the summary because the summary just justifies all of the paragraphs we're going to go through. So starting it off, the prison REIT sector overview. Prison REITs, the darkest corner of the REIT sector, have been slammed in 2020 as pandemic-related operational struggles have clashed with ever-intensifying political headwinds. In the Hoya Capital Prison REIT Index, we track the two largest private prison owners and operators in the world, which is CoreCivic and the GEO Group. Together, these two prison REITs own 125 correctional facilities in the United States and account for roughly $2.3 billion in aggregate market value, excluded from many mutual funds and ETFs due to the ESG-related concerns. Prison REITs account for roughly 0.5% of the broad-based Vanguard Real Estate ETF, VNQ. And I just want to throw this in here because they also don't mention these things are diversified a little bit beyond just the US as well. I mean, GEO Group's got things in Europe. I think they're expanded into Australia and Africa as well. Undoubtedly, the most controversial real estate sector, prison REITs have been under assault from the hardline cancel culture that views private prisons as conspirators and powerful prison industrial complex. With more than 2 million inmates, the United States has the largest prison population in the world. An inmate count that has quadrupled since the 1970s, the U.S. has the highest incarceration rate in the developed world, and despite accounting for 5% of the world's population, it houses nearly a quarter of the world's prisoners. According to the Sentencing Project, at the current imprisonment rates, 1 in 9 men in the U.S. will be incarcerated at some point in their lives. Now, this is some pretty interesting stuff right here. We got a little chart that kind of overviews this. Driven primarily by the war on drugs that began in the 1970s, along with mandatory sentencing requirements associated with measures like the 1994 crime bill, there are now more people incarcerated for drug-related offenses than the total prison population in 1975. According to data from the U.S. Bureau of Justice compiled by the Prison Policy Initiative, the National Research Council estimated that half the increase in the prison state population between 1980 and 2010 was due to an increase of time served in prison. Already facing secular headwinds from declining prison populations, private prisons are facing a more immediate existential crisis if Democrats sweep the 2020 election, an outcome that polls and betting markets suggest is more likely than not. And I don't have an opinion on the U.S. elections, but yes, this is a highly political stock. Here's a little quote from Joe Biden anyways. Stopping corporations from profiteering off the incarcerations, Biden will end the federal government's use of private prisons, building off an Obama-Biden administration policy. Biden will also make eliminating private prisons and all other methods of profiteering off the incarceration, including diversion programs, commercial bail, and electronic monitoring, a requirement for his new state and local prevention grant program. program. Federal contracts account for roughly half of private prison industry revenue, with the U.S. Immigration and Custom Enforcement as the heaviest users of private facilities. The ICE has been the primary driver of incremental demand for the incarceration beds over the past decade amid a surge in border crossing apprehension, which, if you guys don't know, go watch Immigration Nation. There are thousands and thousands and thousands of Mexicans, Spanish people trying to flood the U.S. border. I'm not going to try and make this video controversial, just stating that as a fact, which we can see here between GEO Group, CoreCivic. You can kind of go through that. Basically, U.S. Immigration and Custom Enforcement make up for 22% of GEO Group's beds and 29% for CoreCivic, but we can still see a massive diversification here between Australia, Florida, Arizona, the state of California, which the state of California, if you didn't know, kind of amended the contract for using private prisons. But at the same time, as soon as they did that, they also extended GEO's contract for like another 5 or 10 years or something. So, I mean, it's kind of wishy-washy what they say and what they do. Private prisons remain in an easy political punching bag, not only for politicians, but also for financial institutions and asset managers. Many of the largest banks, including JP Morgan, Wells Fargo, Bank of America, have committed to no longer provide new financing to private prisons after any current agreement expires. Now, this is something that's been very controversial because this has only happened actually within the last year, in which GEO Group cut their dividend to basically stack cash. So when their leases come up to their due date, they want to make sure they have enough cash to fund themselves so they don't have to rely directly on getting financing from banks. But at the same time, I honestly don't think somebody will be there to finance them. Hopefully it's not at a higher interest rate, but that is one of the risks that come with these current prison REITs. So prison REITs hadn't always generated the political attention that they do today. CoreCivic was founded in 1993, while GEO Group was founded in 1984, and each company transitioned to REIT status in 2013. While the hard evidence generally debunked the core claims of the harshest critics, prison REITs have faced mounting difficulty in accessing capital from ESG-focused institutional investment communities. Citing the need for more flexibility in dividend policy and capital allocation decisions, CoreCivic announced during its Q2 earnings call that it is abandoning the REIT structure. This is why I chose GEO Group. It's a much more sound investment than CoreCivic is. Kind of glad that I went down that path rather than the other direction. Along with the revocation of REIT status, CoreCivic also eliminated its dividend, one of 65 equity REITs to have reduced or eliminated their dividend since the beginning of the CV pandemic. This week, as previously announced during Q2 earnings report, GEO Group also reduced its quarterly dividend to from 0.48 cents to 0.34 cents per share, which again, guys, was expected due to the fear of lack of financing coming up in the next few years. And we believe that GEO likely isn't far behind CoreCivic in a transition away from REIT status, underscored by the unconvincing answers in their Q2 earnings call. I think this was a quote actually from the earnings call. It said, "I think we're committed at this time to remain a REIT." Actually, they seemed very, emotionally committed. They're like, we want to be a REIT. This is what we do. We want to keep it. I think they're kind of understating. I listened to that whole conference call, guys, and I actually felt pretty good after it. I mean, the general tone was nice. But let's get a deeper dive into the prison REIT, shall we, and their fundamentals, because this is where things get super, super interesting. If there is indeed a vast prison industrial complex, as critics allege, prison REITs haven't been very effective conspirators. Private prison ownership remains a challenging, low-margin business with both volatile and poor historical investment returns over most recent measurement periods. Pandemic-related headwinds and the mounting political heat have added further pressure to the sector this year. Prison REITs are lower by roughly 43% in 2020, the third worst performing property sector this year. But by comparison, the Vanguard Real Estate ETF is lower by about roughly 16%. So there's some hope there. But either way, prison REITs had bounced back in the late 2016 and early 2017 after the Trump administration reversed the Obama administration's order to phase out the federal usage of private prisons. But that rebound was relatively short-lived. Following the passage of the First Step Act by the Trump administration, which has further reduced prison population. And as the 2020 campaign season has ramped up over the last several years, so too has the scrutiny on the private prison industry. Since the start of 2015, prison REITs REITs lost more than half their value, delivering an average annualized return of about minus 9.7% compared to the 4.8% average annualized return of the NYSE All Equity REIT Index, which while these facilities may indeed be essential infrastructure, the government contracts that are generally as high quality as any tenant, the CV pandemic has nevertheless weighed significantly on operations fundamentals, because we do know a lot of these prisons got hard hit. They did as much as they could to basically put people on house arrest. They really cut down on the judicial system. I mean, like a lot of people that had to go to court, they like pushed the court date back. So I'm sure there's a lot of people that were really happy about not going to jail just yet. But let's talk about the discounts, baby. Private prisons trade at precedented discounts, okay? Prison REITs continue to trade at a wide discount to the REIT sector average. Prison REITs trade at an estimated 4.6 times their price of FFO, which is funds from operation. The multiple compared to REIT sector average is at 20.5. So the prison REITs are trading astronomically less. Again, 4.6 times their FFO against the average, which is 20.5 times. Prison REITs also trade at a sharp net asset value discount, which can be a double-edged sword for value seeker investors. As external growth becomes all but impossible with such an unfavorable cost of equity capital, prison REITs trade at a 50 to 60 NAV, a discount based on consensus estimates. But it is unclear whether a private market exists to potentially close this valuation discount, which we can generally see here, but not to overcomplicate this, let's keep reading. Once the highest yielding REIT sector, Core Civic, eliminated of its dividend, and GEO Group's reduction of its dividend have knocked the private prison REITs sector off its top spot. Prison REITs pay an average dividend yield of 6%, still far above the REIT sector average of 3.2%. Despite the dividend reduction, GEO Group still yields 12%, which is an estimated 60% FFO payout ratio. So, I mean, they got plenty of room to pay this dividend, which is something I talked about a lot. GEO commented that the reduction allows GEO to remain structured as a REIT and will give us sufficient flexibility to sustain our dividend should our cost of debt increase in the future. Core Civic, meanwhile, has no plans to reinstate any dividends this year before the conversations of the C Corp on January 1st, 2020. Now, the key takeaways, and the end is near on several levels, so this is going to get really controversial, all right? While intrinsic value exists in the 125 prisons and nearly 200,000 prison beds that are generally in short supply in the States, these companies will likely face continued difficulty operating as public entities. While we believe that prison REITs would be a substantial bounce on an unexpected Republican victory, if Trump wins, of course, next month, as with the rebound following the 2016 presidential election, we question whether the improved valuation would sustain given the underlying secular headwinds of declining overall prison population in the U.S. absence a significant shift in political and cultural attitudes or in the structure of capital markets. We believe that these entities face continued difficulty in operating in public entities. So generally, we are talking about one of the most undervalued REIT sector that currently exists. And this is something that my stomach has turned on a lot, because every time I get worked up by these articles, I go listen to the conference calls, I go look into the books, and I always get turned back onto the company, even though they just cut the dividend. And I saw my 700 annual dividend get cut to about 500 in annual income. But just taking a look at the long-term chart of this company, guys, I mean, we can see that the actual performance going back to the 1980 isn't as bad as they said it was. I mean, it was astronomical leading up into 2018, heck, even into the beginning of about 2019, 2020, when the stock was up 1,300%, massive dividend yields, in which only now we're starting to see a rapid decline thanks to a lot of the negative headwinds. Right now, I just want to see what happens and what the election's going to do to it, because if Biden wins and they actually follow through on these plans to basically abolish the private prison sector, get rid of it as public REITs, you can't just get rid of it. That's just the thing that I don't understand, because the biggest problem that all these individual states had was they couldn't afford to build these prisons and deal with them on a management level, so they kind of used the public markets to finance the prisons, in which the government pays for the beds, and they do make extra money off commissaries you have to pay to use the phone, etc., etc. And I don't want to get into the moral debate of charging criminals to use basic, like, fundamental things like phones and, buying like toothbrushes and stuff, but we're talking about the worst of society that has to get dealt with. Now, I do think they do have a lot of, political problems, because I'm sure you've seen the news on some of the stuff that goes on in these prisons. But at the same time, if you go on GEO's website, there are a lot of incredible stories. These guys turned turned a lot of lives around. They deal with a lot more than just hardcore prisoners. We're talking about people with mental issues. We're talking about troubled youth. And they also deal with like the transport of prisoners in the UK, where they have kind of a busing industry just to move prisoners around. I mean, it is a very diversified company, which is something that also turns me on a lot to it as a safe dividend provider. But honestly, I just want to get through the election. I've debated myself many times if I'm better off just selling it and buying into something like an O Realty Income, or again, something like a RioCan, and just bringing up some other REITs, or even getting into maybe some industrial REITs. But for right now, I'm just going to sit back. I'm going to watch it. I may come to that decision or not, because obviously dealing with this insane volatility and just dealing with the stress that comes under the news of this does make it a challenging investment to hold on to for sure. And I've been holding on to it for a while. Again, I'm down whopping just massively on my current position here, guys. And I'd love to know if you hold this REIT yourself. And I want to know what you think in the comment section below. Again, I do enjoy the high yields. This company paid out a lot. I got on Netflix because of this company. And again, I'm only down about $3,200. I don't think there's much more downside risk unless they actually abolish the entire private prison sector. But at the same time, it is trading so close to its underlying assets. I just can't see the stock dropping much more than to the $10 level where it hit at the base, right? So these are just some of my thoughts. That article was brilliantly written. It really touches on both sides of the prison sector, the good and the bad. You know, it's undervalued, but it does come with its own risk. So again, I'd love to know what you guys think. Quick video today, but stay cool, stay awesome, and I look forward to catching you guys tomorrow.